Market observations, Townsville, Queensland. Now, this area comes in red hot. It is by strong viewer demand that we are now covering Townsville today. This has come from multiple comments, multiple direct messages, multiple private chats on Facebook, inquiries into the businesses that I operate and work in, Ripe House Advisory and others. This is coming in, as I say, red hot. This is on everyone's lips, Townsville, Townsville, Townsville. Today we're going to be taking a deep dive into the data, and I'm going to be going into some data that we haven't covered before. I really want you to challenge the way that you think about research and how you identify areas. You cannot walk along with other sheep. You have to break free, challenge the status quo, and invest in areas to set yourself up for your future. We are operating in an environment at the moment where the research has become commoditized to a large degree. Okay, and I'm going to be going into some of those sources today. What this means, you have to break free and operate ahead of the masses to be able to be able to generate returns that are, above average, strong returns. When you are operating with the masses and relying on commoditized public research that has been discussed in large forums or, off-the-shelf research providers, you are then operating with the masses. And I've got a couple of stories today. I did speak to a real estate agent as part of my business as usual over in Perth, and they said it's really interesting. I've been getting dozens and dozens and dozens of phone calls about each property. This is for one property, dozens of phone calls where the individuals are asking the same questions. Okay, they're not negotiating effectively, and she said that they've been paying 10% or more above her expectation for properties because they just have to buy in this area. It has been recommended to them. The brief has been given to them about what to ask that real estate agent. It's all the same questions, cookie cutter questions. It's as if they've been educated by the same provider and they're coming into this market en masse. This provider must be pretty good at doing what they do because there are literally hundreds of them going in there. They're fighting over each other and they're all then blowing out prices. This real estate agent couldn't really understand what was going on. I did give her potentially some insights into, the wider property investment community. We have to do our own research, but we cannot rely on public sources of that information. We have to dig in deeper. We don't want to be investing with the masses. We want to be ahead of them. We want those masses to deliver us the hockey stick growth and not us generating it for others. All right? That's a really important point. Today I'm going to be challenging the status quo. Townsville is a market that's on everyone's lips. Is that a good thing or a bad thing? Should we invest with the masses or should we invest before them? I'm going to be challenging that today. As always, if you like this content, please like and subscribe to the channel. It will be much appreciated to me. If you hit the bell icon, it means that you will be notified the moment new videos are posted to the channel. You're on the inside scoop. You might even be able to jump into a market before others and, call agents and get on that right side of hockey stick growth because you have that bell icon selected. Once again, also, it would be much appreciated if you were able to share this video with your friends and family. Drop it into social media groups, comment sections, people chatting about Townsville or Queensland generally. It would be useful to that conversation. I'd love to get a comment, a really dynamic and engaging conversation working on the comments to this video. So if there are any questions, dive in. We can pull some dynamic research in for you. Eric within my business is also an actuary, a data scientist. We've got a large internal database. We don't outsource or buy data in. We have to be the first to act. So if you do have any individual questions about Townsville, areas in particular, concerns, questions, positive aspects, drop it in the comments and we're happy to drop research right in there for everyone or for yourself. Okay, so that's an invite and please take us up on that offer. So to now, Townsville, Queensland. Let's dive in. Chris has given me the clock. I've got to keep this short and sharp today, but I do have a lot to go through. So if I'm talking quickly, slow it down potentially. Property investment is a science. I'm not going to go into this. We all know this. We've talked about this before. What I haven't talked about, there are two components to this. We've got to look at the size of the opportunity, and that helps us to determine, is this a large opportunity? Is it towards a longer term, this is going to outperform above the national average? Okay, the overall opportunity has to be large to justify our attention, and then separately we have to work out, is it the optimum time to buy to capitalize on that opportunity? Okay, I've been around the industry a little while, over 10 years professionally, almost 20 years as an investor. I know a lot of great researchers, okay? I'm friends with a lot of them. Probably Jeremy Shepherd at DSR Score is one that is excellent. He's very good. DSR Score is good, but it is an indication of on-market activity around the buying window. Is it open? It doesn't talk around the overall opportunity. So you can go into a market where the buying window is at the optimum point, okay? An on-market observation, but you're buying in a market that doesn't have a large scope of opportunity. You have to have them both working together. We want to have a metric that we can look at to determine this overall opportunity, and then once we've found those, determine, is this the best time to be buying? It's the where and the when. We have to have them combined together. So this is firstly, let's talk about the where. Is Townsville a strong and compelling market opportunity? Remember our formula. Firstly, employment, very diverse employment. Healthcare is a big ticket item, all right? Public administration, big ticket item. Education and training. These are the top three, and I love to see these as the top three. We are very diverse. Sorry, diverse, not very diverse, but we are diverse, okay, across the nation. That's good. Income growth, very low. This is a national figure. Income growth, we can see we've only gone up here just over 5, what is that? Some 410 to 470 over the last almost decade. Stagnated income growth. It is a first area that we need to look and dig into deeper. Employment is diverse, but it is stagnant. Now, commute time, it's a spread out LGA. Okay, Townsville is a spread out area. Nationally, this is a very good commute time. Average commute is about 10 kilometres. You might have people, parking the car and walking into work. This is individual private research that we have conducted about the average commute time nationally. In this case, it is very good. But once again, you'd expect that as such because there's 200,000 people live there. Most people have cars, drive to work, not much congestion. So overall employment, very diverse. Commute is good. Income growth, let's watch that. Why are there reasons? What is occurring there that has stagnated income growth? Unemployment, very bullish. Okay, we can see here over the last few years, unemployment has been retracting and reducing now to almost full employment, essentially full employment, very strong unemployment rate. And this is, around the national level. It's very good for a regional centre. Okay, so unemployment is good. We've got full employment, but it hasn't started pushing wages up yet. Why would that be? New projects on the horizon. Okay, this is a very busy slide, but I want to unpack this. I have seen people mentioning social media. I have seen research talking about the projects coming through the pipeline in Townsville. A lot of them are already in the past. A lot of infrastructure upgrades are already in the past. A lot of things like the upgraded Cowboy Stadium in the past. That is now priced in, okay? The uplift in Townsville as an area, the perception of this with a national quality stadium, 25,000 people, it's already priced in, okay? And we've already had growth in the Townsville market last year and the year before. So all of these infrastructure and public amenity projects that have happened in the past, we cannot consider those in our thesis moving forwards. We have to look at the projects that are coming up in the pipeline, which are going to add net total to the utility of the area to see what is going to cause this ongoing reasons for growth. Okay? And when we start unpacking this, there's a few big red flags for Townsville. Very, very big red flags. Solar, largest projects, okay, is a power project. How much ongoing employment do you think is required for a power project, a solar project? So compared to the $600 million purchase price, you'd expect the ongoing employment for that would be far less than, say, a $600 million hotel, okay? You'd expect it would be a dozen, counting in the tens, not in the hundreds for ongoing employment. So whilst this is a very big ticket item, and that's also to say a lot of people that work there might be FIFO, okay? They might be ongoing workforce, might not even be living in the same area as where it is based. So these are the questions that we need to ask. We can have and list these lovely big ticket items, but is it going to be actually impacting the overall area? You know, dozens of jobs is not going to move the dial. Hundreds? Yes. All right? So these projects, I wipe them off. You know, we've got over $1 billion worth of projects. That is not added necessarily to the overall utility of the area. We are going in the wrong direction if we are considering our investment thesis and looking at these types of projects. Construction, jobs, okay? Ongoing business and commercial viability, great. Ongoing employment is what impacts, and our research has shown that ongoing employment is what impacts property price growth. And these are not going to generate ongoing employment. This one will tick, $250 million. Bruce Highway, once again, Bruce Highway, updates to infrastructure. Big ticket item, it's very expensive to build, ongoing public utility benefits. It doesn't employ anybody, but it brings economy efficiencies into a market. People can get to areas quicker, they can commute faster, the perception of an area that's up and coming, it's nice and shiny. This all does have a public and a positive perception change, but once again, $230 million spent on roads versus $230 million spent on tourism, health, education, public services. It's night and day. Our research has shown it's almost 10% impact on property price compared to those big ticket items in health, tourism, hospitality, all of these nice public improvement projects. So when you run down this list, it really is only the Port of Townsville project that really is the big hitter. Okay, you've got then infrastructure, infrastructure, Townsville airport upgrades, big ticket item. These are the ones that really do impact the area, all right? But it's not the majority of the overall projects. So when you consider spend per capita, $16,000 of projects in the pipeline per resident, you might think that sounds good. On a national level, it is high. It's in the 80th percentile. National level, that's good. When you dig into the actual projects, it's a big flop, okay? Most of the projects are not going to have an impact ongoing with property prices and demand. Let's compare it to other areas. If you think this is good, if you think this $1.5 billion plus or minus is good, look at other areas across the country. Because anyone can jump on Google, it'll take you half an hour to research and find those projects. And that's, you know, it might convince you that this is a good place to invest because there's $1.5 billion worth of projects. No, you have to do it for every single local government area across the country at around the same time. So one area is not out of date compared to another. And then you need to compare apples with apples. We need to line up every local government area, do the same analysis to work out if at a national level, this level of per capita spend is above or below average, okay? Because we can't just be looking at these big ticket items thinking this is great, going and investing there when Townsville is just not as strong as other areas. Let's compare it to other areas to give some context. Against Lithgow, Lithgow has over 20 times the per capita project spend, over $400,000 per person. That is astronomical. You've got $15 billion rail projects, infrastructure projects going through the area. Okay, you've got pile upon pile upon pile of mining and farming improvements through the area. So when you compare it to other areas across the country, it pales in comparison. Let's compare it to an inner west area, like the inner west of Sydney, $300,000 per resident. It's just mind-blowing the level of infrastructure and public amenity improvements that are going on in some pockets of the country. Once again, billions and billions and billions and billions of dollars being spent by the governments to upgrade infrastructure in these areas. So when you compare it to the best of the best, I'm not saying Lithgow is a good place to invest. I'm not saying inner west of Sydney is a good place to invest. But when you compare this to the best of the best and you line up every local government area in the country, it pales in comparison. When you compare Townsville to other local government areas that are a similar size, a similar type of area, remember Townsville is about 200,000 people. So's Hobart, so's Toowoomba, plus or minus a few tens of thousand, right? Hobart, $27,000 per capita in new projects. Pales in comparison. Hobart far and away in front. Toowoomba, another Queensland area, 20,000. So even when you compare it against two peers, similar types of cities, it still is inferior. So we cannot get wrapped up with or carried away with these types of big ticket items. They just don't impact a market. And if this is our thesis to invest in Townsville, then why aren't we investing here, right? Let's move on. Local lifestyle factors. One of the important factors of our formula that we've used, we pioneered this formula, this way of looking at a market about 3 years ago now at Ripe House Advisory. We are the original. So these lifestyle elements, we have then plotted them on a map, but we've calculated the total amenity for this area. We've got our big ticket items, our Bunnings, our airports, our hospitals, all in close amenity. You know, we could do this research about any particular location in Townsville, but overall, extremely good lifestyle factors in Townsville. Projected population growth. It has been a downward trend over the last few years, just under 1% population growth. Internally at Ripe House, we also pioneered, along with Bernard Solar Demographer, future forward, COVID-proof population projections. Okay, this is post-COVID population projections. In the next 3 years, we are estimating 3% population growth. On a national level, that is very high. It is very good. But remember, we have to look at the supply coming into the pipeline. In many suburbs coming into Townsville, we're seeing 1.5% to 2% new supply coming into the pipeline each year. Recently, we have to dodge those minefields. But overall, population growth is strong for a regional centre. Okay, but it does mean that when there is population growth, that there is supply for people to move into. Okay, we have to now see, is that supply constrained? I'm going to summarise all of this, and it's something I haven't done on these slides before. Internally, we have a predicted performance score. It is trying to describe the size of the opportunity. Okay, if an opportunity is very compelling, that formula is all working out. The predicted performance of that area over the mid to long term is going to be very strong. To Townsville, it's not all bad, is very good on a national level. The top 85% of all areas. So that means out of there's only 15% of locations that do provide stronger investment thesis from the overall opportunity. So it is very good compared to its peers. Interesting enough, basically one of the top 5 local government areas in the country at the moment for opportunity is Blacktown in Sydney. But this is going to illustrate to your point. It is not in the buying window. So for the next 5 to 10 years, the opportunity in Blacktown is outstanding, but we don't want to buy there now. We want to wait a year or two for the correction or the market to get itself organised and then identify our buying window when the market is about to have that hockey stick growth. So this shows you this concept. Blacktown beats Townsville, but it doesn't have a buying window. Okay, if you compare like to like, another large capital city, another regional centre in Queensland is Ipswich, is excellent. So even when you compare it to other peers, Townsville, it's good, but it's not excellent. It's not right at that top tier. In fact, there are dozens and dozens and dozens of other LGAs that we are targeting, we are looking at, that are far away and beyond more attractive than Townsville. It's still very good, but it's not excellent. I prefer to be fussy. All right, so hopefully that summarises. It's challenging the way you're thinking about this type of thing. Overall, you can do a lot worse. Overall, Townsville is looking strong. The overall predicted performance is very good, all right, but it is not excellent. Let's now look at the purchase analysis, what's happening on the market, to work out, is the buying window currently open? All right, so the overall opportunity is very good. Let's determine, is the buying window open? Days on market, and I've gone into this in a lot of detail before in other videos, so I'm going to step through it quickly. Very tight, almost 20, which is a very highly efficient market. A lot of heat in this market. We've got high competition. Okay, we're at the yearly average. You know, we have had some blips up here, but we're not in this danger territory here at 20% where the market is just so hot we can't even really operate and buy. So, you know, this is a heated market, don't get me wrong, but it's okay. We can still operate here. The buying window might be just opening for us. This is a good sign. It's showing that there is depth to the market, but we can still reasonably operate. Stock inventory, total stock inventory has been stable over the last 12 months. Houses here in the red, it's probably relatively stable. Is this a lot of stock? We have to double check that in a moment, and I'll show you the metric we use to look at that. But stock inventory is stable. It hasn't started winding up and tightening yet. Okay, days of supply, really important metric, extremely high correlation to future predicted price performance. We're looking at 100 here. There are other markets that are tighter. It has actually been trending upwards slightly and now stabilized. This is a heated market, but it's not really, blowing the top off yet. All right, it's starting to potentially coil, but we still have some room to breathe. The buying window potentially could be, 3 to 6 months away. But it's still, it's not a heated market. It's not showing these signs of being a heated market, or we've already missed the entry point. So it's all looking quite good for a market that's starting to coil, but not quite there yet. Asking prices. We have seen over the last 6 months, they have started moving, okay? We've already seen 10% growth in the asking price in the last 12 months. We can see the top end of the market moving as well. That's a good positive sign. So it really is all moving up together. I like to see the top end of the market moving, because it usually drags the median up over time. We're not buying the top end of the market, we're buying down here. Okay, so when we know we've got some room to move at the top, this line potentially is going to move and the top will start stabilizing. Okay, so once again, we're seeing these signals all aligning. The buying window is potentially coming, but we haven't seen this coiling up yet. All right, so it still might be a few months away. Median sale price, once again mirroring the houses here in the blue, asking price increases. We've gone from sort of just over $300,000 as a city in 2018 through to $400,000. It hasn't blown its socks off, okay? We identified this market in 2019, and I'll tell you the reason why we didn't invest there, okay? And this reason still stands, and it's very compelling. But it has had upward price movement throughout this time. All right, even in the last 12 months, we've grown about 10% across the city. So we've already started to see this price performance. The market is tight, but it isn't bound up and wound up like a lot of the markets that we've recently looked at, and it has started to move. So this is a question of, is it going to constrict and bound up even more and then blow the roof off? Or is this all it's ever going to do? And this is the important point, because there's a reason why, this is probably why it's all it's ever going to do. Discounting, okay, we're now starting to see properties selling for asking price. Once it jumps over 0%, we're starting to see things being bound up, all right? We're starting to see the market really in that upswing up towards a market peak. We're not quite there yet. It has been a trendward upwards. This is a sign, and it's very consistent with all the other signals that are buying windows potentially 3 or 6 months away. Let's see if it's confirmed from the rental side. Days on rental market, extremely tight. Rental listings, extremely tight. Weekly asking rents, extremely bullish. Okay, 10% approximately increase in asking rents over the last 12 months. Very bullish sign. Yield is very high. Okay, so we're seeing confirmations that a buying window is opening up. The rental market usually leads the buy side, and the rental market is booming now. The buy side showing we've probably got 3 to 6 months before we have that bound up, that tightening. But is it actually going to occur? I'm going to give a really high level summary. Overall opportunity is very good. Not excellent, but very good. Buying window potentially coming up. We're definitely not at a peak. We're definitely not in a trough or a correction or a consolidation period. We are in the final stages potentially of a consolidation into a buying window. Okay, so that's all looking very good. Yield is high, 5.5%. But it's been the same data coming out of Townsville for 3 years. We identified it in 2019. If all of these charts could go back for 2 or 3 years further, we would see the same thing. It has been almost a buying window for 3 years and it hasn't moved. And something is going on there that is stopping it really pushing forward. All right, I'll tell you what it is. Insurance premiums. 73% increase in insurance premiums in this year alone. the average insurance premium before these increases was $3,000 a year. The national average is $1,400. We have cyclone damage. I spoke to a real estate agent up there last week. Anything north of Mackay, you can write it off for insurance premiums because of cyclone damage. Okay? You've got to have a think about how this is going to impact investor demand in a moment, because investors constitute a large chunk of any buying activity in a market. And if they are out of it, or they have this big red flag attached to their investments, they're not going to be active and they're not going to really suck the supply out of a market as it should. All right, so this is the reason why the market has never really got off its ground. As I mentioned, we were looking at it. The data was looking awesome in 2019. We couldn't get past this fact. Since that time, we've well and truly beaten the Townsville growth. We know of other larger buying groups who've been operating there extensively in the last year or so. I don't know how they can get around this. Even if you, this is an average figure, but even if you do identify a home that has a lower insurance premium, and they do exist, there is flood impacted areas. Obviously, the whole area is cyclone impacted, but you do have different types of buildings that are impacted in different ways by cyclone. Even if you are able to identify a property that has a lower insurance premium, it is surrounded by other properties that have high insurance premiums. Next door might be double the insurance premium. Okay, you have to think about how that impacts demand in a suburb. Even if you buy a property with a lower insurance premium, the demand for the properties next door and around you will be lower, all right? And they are the properties that need to grow in value for your property to grow in value. All right, so you might be saving money from, cash flow wise. You might be one of the lucky ones, the exception to the rule, when now the average insurance premium is well and truly over $3,000. You might be the exception to the rule because you've picked that property and you've pinpointed it, but surrounding that is not potentially overexposed to high insurance premiums. Therefore, their growth, their demand is going to be stagnated. It's going to be detracted from, and you rely on them as the comparables to increase the value of your property. So you cannot rely on these minefields. You have to be very, very fussy. And when there are high insurance premiums, the cost for investors increases. Your yield might be high, but you have to remember what is holding back price growth to rents are growing. Okay, what is holding back price growth? What is putting that handbrake on price growth? It's because the actual net cash flow for investors is hampered. I'm going to show you that in a moment. So we have to ask our question, what is holding back price performance? I'm going to come back to this slide, and this is just for a bonus material. At the end, I'll come back to this one. I might cover off this property first. Okay, all I've done, I've gone into Kurrajong, which is a suburb that we were looking at a few years ago. All right, Kurrajong, it's investor grade, and I'll talk in some of the reasons in a moment why we might have picked it. Actually, I might do that now. Sorry to jump around. Let's go into Kurrajong. Recent price growth, you can see Kurrajong here in the middle, hasn't moved in value in the last 3 months. Okay, that might be a sample size issue, might not have been. We do need a minimum number of properties sold to generate reliable data. When we look at short-term metrics, like a 3-month change in price, we do need to have a large enough sample size to be able to compare segment or time period to time period. At the moment, when it's a 0, we can see it's usually a sample size issue. We can see over the, we have had a tract of very good price growth through here, and then on the periphery, it's been lackluster performance. Down here in these southern cities, we've got southern suburbs, we've got a huge amount of supply risk coming in through here. Okay, even supply risk coming in through here. This is a risk factor. This is impairing price growth in the last few months. We can see that you have to be in this zone here to really be ahead of the pack in terms of price performance in Townsville. Where you see these zeros, it's usually not because it has grown in value 0% just by chance. It is because of sample size issues. We haven't got enough data. But you can look at what's going on around it, okay, and it's generally been quite strong. I'm just going to jump through this quickly. Kurrajong and this area here is our general area of focus, and we can see that it is performing pretty good in the last few months. What are the prices? How does that change across the area? Kurrajong, you can see this is the cheaper area pocket. You've got a uni here, you've got a river with flood area impacting, you've got industrial up here, and you've got the CBD area here. You can see this area is very underpriced compared to its neighbours, right down here into Annandale, into Idalia, forgive my pronunciation, and even down into Douglas. You have a lot of new homes construction which does weight and change the median price in these areas. This is your lower to mid socio areas that we've typically targeted. This is the data we saw that was very bullish in 2019. This was our area of focus. Okay, we can see yields. Once again, zeros mean low sample size, but this is also a pocket of typically higher yields. You're coming into this market at 350,000, you are expecting yields close to 6%. You can see once again that yields do drop in these southern suburbs here. Once again, newer properties, lower yields. Vacancy rates, let's have a look at how that changes. This is relatively high vacancy rates at the moment through these investment sort of grade suburbs closer into the CBD, 2%. It's not until you get into the periphery where you get lower vacancy rates. All right, so the inner city investment grade areas do have slightly higher vacancy rates at the moment. Okay, days of supply, I might skip through that. Forgive the dollar sign here, we've got the wrong legend that we've put onto these maps, but you can see these areas down here in the south are turning over really strongly, as is the periphery, and this pocket through here might be 3 or so months behind. Days of supply hasn't started to yet tighten. These are very heated markets. Okay, you've already seen people pushing prices and demand through here. You might have already missed your window. Okay, this is still 3 to 6 months behind. That's the way we need to look at this data. Owner-occupier level. Generally, this area towards the CBD, lots of units, lots of renters. Owner-occupier level is sort of 60 to 70%, 50% down through here, but 60%, which is a good baseline. Any lower than that, we start to have issues. No real issues here around owner-occupier levels. I hope this is a useful type of analysis for you. Let me know if it is, and I can do more of this type of analysis in the next videos. But really, our focus as an investor is in this segment here in Townsville for a number of reasons. Okay, yields are strong, vacancy rates are stable, a little bit higher than normal, but still not okay. And days of supply still gives us room to negotiate and to enter into this market. Okay, so this is our area of focus. I have picked on Kurrajong as our suburb of focus today. I'm not going to do street level analysis. What I'm going to do is I'm going to have a look at a deal, all right, a property on the market in Kurrajong. This is literally the first listing, #1 on realestate.com. Offers over 350,000. I have assumed that we bought it for 350,000. I looked at what other 3-bedroom houses in this condition were renting for, and I assessed it at $380. It might be a little bit low. We could make arguments for $390. That's equating to a 5.7% yield. Okay, 5.7% yield. You would think that would be highly cash flow positive. You'd be really rubbing your hands together thinking 5.7% yield, I'm going to be banking $100 a week, net positive cash flow in my pocket. Well, that's what you might think, but the reality is very different. And I'm going to take you through those numbers now. Cash required for this deal is $56,000. All right. Gross yield on this property is 5.7%. When you run through all these outgoings, you've got this big red flag here. The average insurance premium is over $3,000 in the area. And obviously, this takes a big hit in our net positive cash flow. Overall, you'd think this property would be well and truly cash flow positive. It's not. It's $313 cash flow negative per annum. This is a big red flag for property investors. All right. Overall, the area might be a reasonable place to consider. Remember, it was very good from an overall opportunity, a predicted performance perspective. The buying window looks to be coming up, but it really has never kicked off. The buying window has essentially almost been open now for 3 years. It's been on our radar. We could never make it work. And this is the reason. Even if you identify a property that has low insurance premiums because of the build size or type or exact location, it is surrounded by other properties that have high insurance premiums because of their build type. They are not going to grow in value strongly because investors won't touch them. Okay, that slower performance by your neighbours is going to pull back your performance for your property. It's as simple as that. Townsville is an area that we have assessed and we're not looking at for these multitude of reasons. Let me know what you think of the analysis. It would be much appreciated. Please comment down below with any questions. If you would like us to focus on any other areas, please let me know in the comments. Let's get a conversation going. I would love it if you could like and subscribe to this video and channel. Hit the bell icon so you're the first to be informed of any other videos. And please, share it around with your friends and family. Let's get the link from this video, post it in other groups and forums. Let's get some discussion happening. I would love to see other takes, other conversations. Thank you very much.